Hi, this is Randy Finney with Right Side of the Chart, and this is an early session update for Monday, February, what is today? The 24th, February 24th, 2020. I'll start out, gosh, price alerts going off like crazy on one monitor. A lot of trend lines being broken today, so excuse me for the distraction. I must have had well over half a dozen alerts go off in the last few minutes here, and they continue to go off. What I wanted to get at, just kind of reiterate what I said this morning. I'm favoring a bounce here and reversing short to long. Now, and I wanted to do the video. It's most of what I said in the post this morning. Where we overshot those support levels. So you might be thinking, okay, Randy, those are the key support levels. That trend line you've been harping on, the October 3rd trend line. That's it right here. This yellow trend line broken. Now that is broken. We did gap down. We're down well below. We're not just marginally below it, but we're also at right around support. There's a lot that goes into this. One of the things is, from my experience, many years of trading, in every market environment is different. And got to keep that in mind. There's a difference between, the meltdown in '08 versus, right now coming off all-time highs. We've got a pullback. Where I'm going with this, there seems to be about a floor. Or a ceiling, if you will, if you want to look at the whatever way you're looking at, upside down or right side up, as to how far the market will drop in a single day, and that is roughly 5 is during meltdown days. There is no absolute limit. There are circuit breakers and things that will kick in, but we're not there right now. I don't think we're there. So I think this was an overreaction as far as order imbalances, everything that happened in the pre-market. So I stuck to my guns and actually doubled up right at the open on my QQQ longs. So that's where like I said, went from short to long. We overshot my targets, but again, remember, Sunday night trading, Sunday morning, early Monday morning, future shutdown over the weekend. You don't have the institutions, at least not all of them, or a good part of them. They can't trade effectively. The market's too thin. Selling pressure or buying pressure will exacerbate the move. So, make a long story short, that's it. I think we had that overshoot so far, and we probably saw the lows for the day at the open. Here's a 1-minute chart. So there's where we closed Friday. Remember, we hit those targets. We had a reaction. We paused along there, and they parked it right there. And even in the after-hour session, there was that reaction, if you will, on the 1-minute chart. And then we gapped down today. Futures started going down last night. Here's the open right here. So this is, what I think will prove to be the low of the day, but we'll see. You got to stay flexible. I'm never married to any one thing, but again, I think this is an overshoot. So now what I'm looking at is, where do we bounce back to? So I had a level right here in the 60-minute chart, and again, a lot of this will be a recap what I posted this morning. I've had a line here for a while that denotes, defines two different gaps. I had it written on that chart. I added in with the annotation. We had gap 1 right there. And then, so there's the, the top of that gap. That's obvious support resistance level. And then we had gap 2 right here. And what I did is I turned that line on. You can turn on here and extend the line. And that's what I did. So that's where we were this morning when I screenshot them. We overshot that even more a little bit after that. But now look what we're doing. We're rallying back up so far. If we regain that, then that's a successful defensive support, especially on a 60-minute close. And a lot can happen on a daily candlestick. So at this point, let me say this. We're far enough below these trend lines from October 3rd that it's hard to not say this isn't a breakdown. I mean, it is. As I often say, if you're trading on the 60-minute chart, well, the 60-minute candles are important. On the daily chart, the daily candles are more important. So here's the daily chart right here. I'm going to clean that trend line up a little bit, make sure it comes in and captures that reaction when I roll forward there. I'm trying to hit that reaction low. So you have the 3 distinct reactions. You know what? That thing should probably be up right. Yeah, that's where it needs to be. And what we do there is come into the bottom of the body of that candle. We hit that candle. And again, as I roll this chart in this platform, you'll see the trend line sometimes move. So I'll sometimes have to tweak and adjust these. So where we're at is 220, 287-ish. Here's that big gap right there. Same level I just showed you on the 60-minute chart. In fact, I've had this line here on the daily as well. So if we can recover that, then we hold that support. Now we're looking at a move for a back test of the trend line. And what would that mean? So where we're at right now, measure it up. If we came up just to back test that and failed, that's 2.36%. If you trade NQ, that's going to put several $1,000s in your pocket per contract right there. And, QQQ, it's worth, a shot. So that would be, I think the most likely scenario come in at the very least now back test. Since we gapped down so far below it, not sure if it's going to be regained. If it did, there's a big old gap to be backfilled. And let's just right now say I'm focusing on that. Move back up there. And you can also see I'm going to put it right here. I'm looking on the daily chart. I should have at the top of that gap there, bottom of that candle, at least on the body right here, and then the top of that candle, there it is. So 225, 20-ish, and then the trend line, that would be a logical bounce target. If we get some traction on this bounce, I mean, the day is young. Let's see, zoom in real tight. Here's they started to buy up the open so far, and I suspect they'll do it again some more today. So that's where I think we go. Now, how do you trade it? Look, sometimes they'll come to undercut the lows, because I can tell you there is a plethora of stops, most likely right here. Just a whole. I have to imagine, I wish there's someday in the future there might be some type of feed that will show you where stops are. The big boys can see it, the professional trading desks, the ones that burn the retail traders, and that's what they do. They can see where the stops are. TD Ameritrade, all those companies, they sell that information to the high frequency traders. That's where they're making a lot of money. That's why they're able to give you zero commission. They're making money by selling your information, so the high frequency trading and the algos can have a field day and just run your stops. Anyways, that's what I see right now in my mind's eye. I see just a cluster of stops for those like me that went long this morning, except I'm not going to let them get me on a quick jog down. I'm going to play this one by ear. Or play by play here, be a little flexible and allow for that, but not too much more. So to answer your question, or to answer my own question, what's my trading plan, is be long here, like I said, and then trail this up, give it a little room, because anything is possible. As I just spent talking about how 3-4% is usually the maximum for a drop in a single day. Especially with these kind of market conditions, anything is possible. And that I've learned trading long enough. Anything is possible. But again, I highly favor a bounce from here. And let's just leave it at that, so I don't beat a dead horse. There's a backfill to gap. We can look at it that way. You can see Friday's close. Again, these are showing the after hours and pre-market trades in the shaded area, if you can make that out from here to here. But that's about where we close Friday. And traders love trading gaps. You have a backfill of a gap, and that would bring us up there to about that 230.31 level. You can see it's price resistance. You have this trend line that comes into play here as well. That may be, I'm on a 5-minute chart. I'm kind of just jumping back and forth here, guys, just looking at everything, trying to take it all in. And there's also resistance here about 224.71. That would be a shallow bounce. So I'll just kind of take it by ear, or take it by minute by minute, and see how the charts play out, and decide where to go from here. Okay, and as I'm looking at this, I'm doing this video sort of analyzing the charts as I go, since we had the big move down. Like I said, slightly overshot that the target, the trend line, the 224.70 level. Again, that was a target, so I still think it's going to be a magnet. I think we come back to it, and I want to show you one thing I'm looking at here. Volume at price. Let's turn those bars up. A lot of times I'll have things on my charts tuned down a little bit. You don't see them on the videos. I don't like very busy charts. Look like a Christmas tree, and it can be distracting. But you can see the volume at price histogram has a big thin zone right here. In other words, there's a line right here where you see all these bars, and these often act as support and resistance, and that is also right at that 224.70 level. And so we'll probably get some selling kick in here. May or may not. So what I'll do is at this point is just trail stops up. I already mentioned a minute ago about having a stop somewhat below today's lows to allow them to take one more jog down, try to blow out all the stops for those that bought the open. And also longs that are, got caught on this, and there might be longs that were long all the way from here, and maybe said, oh wow, this is too much for me, so I'm going to set a stop at below today's lows to protect me if we go down any further. So again, at this point I'm allowing that, but if we go up much higher, I'm going to start raising stops and let it run. When we get here, we may have a reaction, but we may blow through there. So basically, a day like today, I like to just kind of periodically ratchet stops, let it run, and as of now, and this can all change before, at any point, but as of now, I'm targeting up here still. I think that's what I mentioned this morning, around that 230-ish level, 229.60, 230-ish. I think we can come back there. Now, if we do that, keep in mind what it means, what happens. There's, first of all, a pretty thin zone. If we get above that 224.70, I wanted to mention that would start to be filled. Let me turn these lines off and follow up on what I was saying here about just letting it run. If we do that, if we do get above the trend line here, that's going to be somewhat bullish. It will mean we had a brief momentum-fueled overshoot and we regain that trend line. Probably won't happen on a 60-minute closing basis now if it does happen, but we can certainly regain it on the daily time frame. So if you see a candle today that prints up here and comes back and closes above that trend line, that would be a potential bear trap, aka whipsaw signal, false breakdown, whatever you want to call it. Again, if this daily candle closes back up there, that keeps us above trend. And again, it's a daily candle that's important. Again, my guess is I'll probably hit that, have a reaction there from below, could even reverse. But again, let me just kind of wrap this video up or move on to a few other things because what I'm looking at now and what I might be looking at 2 p.m. today or 3 p.m. today may be completely different things depending on what I see. I'm going to pour through the charts of the FANGs, FAAMG, the market-leading FANG stocks. I'm going to go through S&P 500 like I'm doing here. I'm waiting for my trend lines to populate. For some reason they're not. There they go. There's SPY. SPY has clearly taken out this 328.77-ish level. That's not a super solid support level, but we're down below it. We're kind of in no man's land on SPY. Really decent support down here around, give or take. I'm going to put that as a support zone. There, right around, down to about we'll call it 321, down to about 319.50. And we're kind of just sitting there in between. Now, I told you guys before, once these 60-minute charts started to play out, I would then turn my focus to the daily charts, and that's what we're doing here. And this chart's a bit of a mess, but this one looks a little cleaner. Here we go. So what do I see here? Let me draw this out. Let me just take away a lot of these lines, just clean this thing up, focus on probably the most important parts on this chart here, and that would be the negative divergence on the daily time frame. We did have it before. We've been building. I took those lines away. We had it there on the RSI, not so much on the PPO. It was a virtual flat line divergence, but again, we can see clear divergence here where we have now clearly put in, along with a bearish crossover on the PPO, which I covered recently. I did that, I think, in Friday's video. Bearish crossover on the PPO. That the histogram shows you there. That's where you look back each of the drops that we've had so far this year, and many of those in the past, they come after those bearish PPO crossovers. But what it does, as well as it does what I call, at least, confirms the divergence. We had potential divergence. We had potential divergence building here. And then it was confirmed on Friday, and it's certainly more so today. So what that did is put in a clean negative divergence. The indicators clearly making lower highs while prices made higher highs. There's your divergent high. And that is the first, you go back on this chart, that is the first clear divergence we've had on the daily since right here. We had negative divergence at this point. I flipped another board. I would have had that drawn out at the time. And we had back then a pretty decent drop. We came up, hit it again, kept that divergence intact, and we had another drop. So That's it. So is this correction over? Probably not with that divergence. So my trading plan is, game an oversold bounce right now, near term oversold, and then get out of those longs. I'll almost certainly be out since I doubled up at the open. I will almost certainly be out at least half of that position before the close today, and possibly all of it. And then sit back, kind of look for the most objective entry or entries to go back into shorts. But again, we'll see how today plays out, whether that'll happen today or tomorrow, or who knows, maybe a week from now. And USO, welcome to the world of active trading. For those of you that traded this one, we run up, get in, get out. Even though the case was made for a potential longer-term bottom, this was another example of a flexible trading plan where I revised that target down a little before it was hit, down to 1136 from what we had. So we fortunately were able to sidestep the reversal, lock in full profits, get out. And you can see that USO is down here now, 1070, so it's come full circle since we jumped out of it. It's now dropped, given back 7% or so from the highs just a couple trading days ago, a couple trading sessions ago, I should say. Now, crude is, remember I moved the stop up to here. You see some gaps in there. Crude is at support. Let me look at CL, and then I might wrap this up. I'll get to gold, everything else. I posted updates on those today. There's some support right there. Let's see, support right around here is what I see. I see I see numerous reactions along this line, 50.76. And so there's a potential bounce trading up right there. You have crude at support. It's not super solid support, but it's decent support. So if the market bounces today, like I suspect, there's a good chance we'll get a bounce. So there's a potential bounce trade for you right there. And CL, that one I would keep stops relatively tight under that level. So 50.70, we'll call it 50.75. Set a stop a little bit below there, not too far below. At this point, really the low should be in for the market, I think. There's, like I said, a chance to run at those lows once more, but I don't think we're going to get that. I'm telling you, that's a possibility, but I'm not leaning towards that one more thrust down to undercut the lows. In which case, you could use a relatively tight stop, and then bounce targets be the back test of this trend line and/or that 52.46 level. So, what would that be? If I drag the line here, it's going to move. So I'm going to drag it from here to here. Go a little bit above there. That should be about the same thing. You're talking about a almost 3.25%, bounce in crude if you get it. So there's a potential trading up for you. But remember, today was we've done some technical damage today. Like I said, we've overshot the trend lines that I started out covering, on QQQ, especially that October 3rd trend line, and we're below it. So we haven't regained it yet. And if we don't, that could open the door to more downside. So I'm showing you these potential step in here, get some quick bounce trade targets, but don't become married to them, because the market, with everything that's gone on for months now, excessive bullish sentiment. The one of the biggest FOMO trades that we've seen in years, fear of missing out, and everybody thinking, I got to get on board, the economy's still holding up there. But there are some signs of softening in the housing market and some other things. And the point is that the market has gotten ahead of itself, both on a fundamental basis. Valuations are becoming excessive. We haven't had a correction now in a while. And we're also looking at a market that's been ignoring a lot of bearish technical developments, such as divergences building, overbought conditions, things like that. And so what I'm trying to say is play careful here, because this is where sometimes you get, if these support levels don't hold, what happens, a dam breaks. Those next levels of stops on longs get hit, and then selling begets more selling. So if you have a lot of longs that get taken out of support levels, longs that have been trailing up this market in Apple and Facebook and Alphabet and everything else, you start to see those stops get hit, and then it becomes a vicious cycle. So we've now taken out that trend line. We're still well below it, and Yeah, yeah, the possibility is certainly there for more downside. Again, let's just focus on today's lows for now. We already gapped down. We've recovered some of that, and more we get up here, the more likely it is to start to trigger some short covering for what I call the JCL shorts, Johnny Come Lately shorts. Those that didn't want to short here at the divergent high or the breakdown, we had these sell signals, and didn't want to short the bear flag breakdown, but now want to short this big gap down. That's to me the like I said, I'm on the other side of that trade now. We're closing shorts, reversing along. So, all right, let me pause it and see if I want to hit on anything else. Then we'll wrap it up. Oh yeah, and the precious metals. I already, again, I told you this video would be a follow-up largely to what I threw out there this morning. I want to get those charts out to you guys early on. So in the whole line of me reversing my equity positions, same thing I did in the metals today. We've had a nice run, so I decided even in anticipation, because same thing, I'm anticipating the rally in the market or the recovery of a lot of the losses today. Same thing, I took profits on my gold and silver because for the reasons I stated, this flight to safety bid. So if the market rallies, you're likely to see money come out of gold and silver. Plus, they've had a sharp run up lately. I told you about what I'd say about 7% since the breakouts I highlighted recently right here on gold. 1580 was a level that triggered a buy signal. And gold has gone almost pretty much is parabolic. This is parabolic advance near term. You get these once in a while. You had it here. It started going up really steep. Correction one, you did push up to make another marginal new high, divergent high as well, and then the correction started. So, that could repeat the same way. But even if it does, that was a decent pullback right there. See, this is such a pain to measure. You have to, if you try to grab a line tool to measure, it moves the line. But that was about a 2.5% pullback. In gold futures, that's it's going to cost you a few $1,000 per contract. So it's nice to be able to sidestep those. Again, we're at the same extreme overbought conditions around that 85 level on the RSI and near parabolic run. So looking for, especially if the stock market rallies, a pullback to at least here, this 1654 to 1650-ish level, and then you have a trend line below. So those are near-term pullback targets on gold. Another way is I just don't think the risk reward is very attractive for the very near term. I'm talking active trader stuff. Everything I'm talking about today, most everything is active trader stuff. We'll see how the daily charts close today and this week if we do get that recovery snapback rally I'm talking about. We'll see. But we have the potential that I can tell you this, daily charts have become increasingly bearish, especially after the drop that we had late last week and today. So that's gold, and the other one is silver. I covered that as well. Silver, you have this negative divergence right here on the 60-minute chart highlighted. There's your divergence with that line. That's your divergence line. Here's your uptrend line right there. Call that a minor uptrend line with a secondary uptrend line coming into play right here. Probably should give you one more level if you're looking to either short a pullback on silver or get out and then maybe get back in. They come in together. It's about 1843 right there. That's price support plus the uptrend line. And that's about it. Let's wrap this up here. We'll keep it pretty simple. Like I said, it's mostly a follow-up of the charts I posted this morning, other than the update on crude oil. And again, today has the potential to either make the daily charts quite a bit more bearish or not if we can regain. There's a lot of work to be done, but it's certainly within the realm of possibility to come back up here. And there's that trend line October off the October 3rd low. So right now we only have to rally, quote unquote only, but that's 1.2%. This market could do that in a blink of an eye if it wants to. But again, that's the important thing. Does it want to? It's all about supply and demand dynamics. Are there still more buyers in this market, more dip buyers looking to get in and buy things up or not? And again, we'll have a lot more clarity, hopefully by the end of today, and certainly as the week goes on. So I will continue to post updates, as I see anything significant. All right, we'll wrap it up here. This has been Randy Finney with Right Side of the Chart. Hope you enjoyed it.